In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture
because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but This is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help.
Yes.
So at some point we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose, out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard. but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through what was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement at the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from my home in New Jersey, streaming on YouTube. It is Friday, TGIF everyone, October 30th, 2020. And man, what a week, what a day. Bullish investors, man, they had hoped that tech would kind of bail them out, deliver this earnings season, but that's not exactly what happened. And it is definitely playing out in the equity trade. We've got U.S. stocks on track for their worst weekly rout since March. So a lot to get to. First up, though, let's check on that trading day. Here is Charlie Pellet.
Hi, thank you very much, Carol Masser. Happy Friday. We made it through a turbulent week. It is a down day, as you correctly pointed out. Developing story. Let me give you the headline from the Bloomberg. CDC issuing guidelines for a phased resumption of cruises. Cruise line operators are spiking as the CDC lifts that no sail order among some of the big players in the cruise line industry. Carnival Corp up 7.6% on those headlines. Royal Caribbean up 4.4%. Norwegian Cruise Line Holdings up now by 4.8%. It is a down day across the board with the S&P now slumping 60 points, down 1.8%. The Dow is down 369, down 1.4%. NASDAQ lower by 328 points, down 2.9%. 10-year down 930 seconds. 10-year yield 0.85%. Gold is up $12 the ounce, higher by 0.7%, 18.79 right now. And crude slumping 2.1%, down 74 cents a barrel, 35.43 on WTI. So again, recapping, equities lower, on track for a losing week. S&P down 59, a drop there of 1.8%. I'm Charlie Pellet. That, Carol Masser, is a Bloomberg Business Flash.
It is indeed a lot going on. All right, Charlie, thank you so much. Let's set the Business Week agenda. Michael McKee, international economics and policy correspondent at Bloomberg News. He's on the phone from New York City. Dave Wilson with us, stocks editor at Bloomberg News, on the remote access from New Jersey. Maybe Mike's in studio. I'm not sure if I heard that correctly.
Keeping your chair warm.
You are. Thank you so much. It's good to know somebody is. Hang on for a second, Mike, because I do want to start with Dave. Dave, Charlie given us the numbers, but walk us through a little bit of the selling that we're seeing. How broad-based is it?
It's pretty broad-based at this point. I mean, all 11 of the main industry groups in the S&P 500 are lower. You look, and no surprise, technology stocks and the consumer discretionary category, which includes Amazon.com, have the biggest losses. And, with tech, I mean, you look at Apple, you can certainly understand why that group's taking a hit.
Right.
I mean, you're seeing the shares, down something like 6% at the moment. So, then communication service is an interesting case because, on the one hand, you had the numbers out of Google's owner Alphabet that were pretty well received. Those stock has kind of come off its highs of the day.
Right.
And then on the other hand, you got Facebook and Twitter. They're really dragging down that group and, dragging down the broader market as well. Twitter, the biggest decline by far in the S&P 500, and Facebook, one of the worst performers as well.
We were watching it after hours. Mike, come on in on stuff because at the top of the show, we talked about what's going on in the markets. When I kicked it off before we went to Charlie, there are concerns, though, among investors that, about a slowing economy. We had a lot of economic news today. How do you see it?
Well, I think you start with the COVID news, and that leads into the economic news. We're seeing record levels of cases. Thank goodness. So far, not record levels of deaths. We've gotten better at that. But it does follow that if we're going to see this kind of outbreak all over the country, you'll probably see more closures. Maybe not a nationwide shutdown, but we'll see more closures, which will lead to more business losses, more unemployment, that sort of thing. And it just stretches out the return to a more normal level of economic activity. And so I think that's what people are thinking about. I mean, you've also got the weight of the election coming next week. And, do you want to be long going into the weekend? You don't know what's going to happen. There's a lot of things going on. But, yeah, I think everything somebody said today that the motto of this year, you take off from what they said during Bill Clinton's election. It's the virus, stupid. And everything goes back to that.
That's my T-shirt. That's my new T-shirt. It's the virus, stupid. It's interesting, though, Mike. I just got off the phone with the Chipotle CEO doing an editorial board meeting with our Bloomberg team, and he said, comparing kind of where we were in March, April with the virus versus today, and he said his most recent challenge is having access to people, especially as the virus cases, the positivity rate, as these things go up, it's harder to maybe have healthy workers who can run the restaurant and having that access to people. And so you do wonder how that will ultimately also impact economic growth and the recovery going forward.
Well, it's been a question is how do Americans react? Do they stay home? Do they get nervous? You have all kinds of doctors and epidemiologists going on television saying, don't have big Thanksgivings. Let's stay inside. The next 2 months we're gonna need to hunker down, and that makes it much harder to get business done. The only good news I have for you, Carol, is at least as far as I can tell, there's still lots of toilet paper in the grocery stores.
Yeah, I haven't run out yet. Just waiting. Dave, come on back in because we have talked so much about, with Gina was on talking about the importance of tech earnings. That has been such a momentum player in 2020. So do we need to be worried as investors right now?
Well, I mean, if you want to be worried, just consider how much these stocks have run up. You look at a company like Amazon, even with today's decline, the shares are still up 64% for the year,
right.
Which basically has created a situation where, there's a focus on whatever bad news might come out of a report as opposed to the good news, when you look at things like earnings and sales and whatnot. I mean, with Amazon, the story's all about that their profitability is going to be hurt because they're spending more money to keep their workers safe, whether it means buying protective equipment against the virus or, reorganizing their warehouses or whatever it takes. So, you've got that piece of the puzzle. And with Apple, I mean, their iPhone sales in their fiscal fourth quarter were not what analysts were looking for. Then again, they're coming out with new models. So, you have to wonder how that changes the equation. It just goes to show you there's a lot more at stake in these quarterly reports, I mean, especially given how big these companies are now.
I'm going to say there's been some buying of Apple phones in this household. Hey, Mike, it's a big week next week. I don't know if you noticed. There's a Fed meeting.
There's a Fed meeting, and we should point out to everybody, it's the decision comes Thursday.
Right.
They normally would meet Tuesday and Wednesday, but because it's election day, they'll meet Wednesday and Thursday. And then don't forget Friday's Jobs Day.
That's right.
So we've got the election, we've got the Fed, we've got Jobs Day. And so Dave Wilson's going to be a busy guy, I bet, keeping track of how the market reacts to all that.
I mean, I think we're all going to be watching, especially if we don't quite get a decision come election night. It could be interesting. Hey, Dave, quick tease. What's coming up in your chart?
Oh, a little comparison between the old economy and the new economy as it plays out in the market value of a couple of companies.
All right, we look forward to that. And you guys are both going to be busy with all that stuff going on next week. Dave Wilson, thank you so much. He's going to be back later on with that chart of the day as well as his stock of the day. And Michael McKee, always appreciative of your insight. Michael McKee is our international economics and policy correspondent here at Bloomberg News, joining us from our Bloomberg Interactive Brokers studio. All right, folks, we know the market is selling. We've got a lot to talk about on this Friday. What a week, what a day. The election, we're creeping closer, just a few days away. Virus cases, as you know, setting records. We've got it all covered on this Friday. On the election, we're going to check in with our Wendy Benjaminson. She's got the latest from the campaign trail and all of that early voting. We know millions of Americans have already voted. Also on the election, you may have caught this already on the Bloomberg. It's also at Bloomberg.com. It's one of our most read stories. It's about the quant trader Susquehanna. They're going to take, listen to this, your election bets up to $100 million. So we're going to find out exactly what they are doing and how they're doing it. It's also a story in the magazine this week. We've got our weekly check on the virus. I mentioned U.S. cases setting a daily record. Dr. Ian Lustbader at NYU Langone, he's going to stop by. We're also going to hear from the president of the Rockefeller Foundation, Dr. Rajiv Shah. They made some news this week, a big financial commitment and initiative to undo the inequities caused by COVID-19. And really, it's about ending energy poverty at the same time. So we'll talk about that. We've got Michelle Terry, CEO of Movember. Remember, it is almost November. We're going to talk about the work they're doing when it comes to men's health. And Paul Reiser, author, comedian, actor, he's back with us, and we're going to hear about his latest work. In the meantime, let's do the Bloomberg Business Week Bite of the Day. It is one number that tells us a lot. Today's number, 23.9 million. Marriott was fined 18.4 million pounds, or 23.9 million US dollars, by the UK privacy regulator for failing to protect the data of millions of customers during a hacking attack on reservation databases. The fine is a fraction, though, of the 99 million pound penalty the watchdog had planned to issue last year. So a little bit of a fine, you might say, there for Marriott. Let's get a check on world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Well, it's a busy day of campaigning for the presidential candidates. President Trump is stopping in Michigan, Wisconsin, and Minnesota. Michigan and Wisconsin are two of the states that were credited with giving Trump the electoral votes in 2016 that put him in the White House. Well, at his first stop in Waterford Township, Michigan, he railed against Joe Biden for warning of a tough few months ahead due to the coronavirus.
He said, long, dark winter. Oh, that's great. That's wonderful. That's just what our country needs, is a long, dark winter and a leader that talks about it.
Today, Joe Biden will stop in Iowa, Minnesota, and Wisconsin. Biden believes he has a good shot at winning in all three. With 4 days until the election and more than 80 million votes already cast, time is running out for Trump and Biden to change the shape of the race. Well, the 2020 election is promising to be the most expensive in history.
The price tag for the 2020 election is approaching $14 billion, double the amount spent on federal races 4 years ago. The Center for Responsive Politics says the estimate includes $6.6 billion spent on the presidential race by candidates, parties, and outside spending groups, with the rest going to congressional races. Small dollar donors, those giving less than $200, accounted for about 22% of the fundraising so far, more than in any previous cycle. In Washington, I'm Amy Morris, Bloomberg Radio.
The World Travel and Tourism Council says the global travel and tourism industry is on course to lose 174 million jobs this year if restrictions to curb coronavirus remain in place. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. It is Friday. I'm Carol Masser, and I'm here with Charlie Pellet. So lucky to have him here. Not so lucky is what what's going on with the virus, Charlie? I mean, look at the case count here.
It is unbelievable how the numbers just continue to rise, straining our hospitals. Three words for you, though, Carol Masser.
What?
Wear a mask. It's that simple. Wear a mask doesn't mean have it around your neck. Wear a mask doesn't mean have it below your nose. Wear a mask means when you're outside, when you're on mass transit, you wear a mask the way it was designed. It's that simple.
Exactly. Listen, and it's not just us preaching. It's just what science tells you, right? The CVC has talked about it, the medical community who we talk to, the folks at Johns Hopkins. It is so simple, Charlie. And you do think about, listen, it doesn't take much for a few cases to become a lot of cases, and then all of a sudden our healthcare system is strained. As massive as the U.S. healthcare system is, it doesn't take much, and we're seeing this certainly. We're seeing it in Europe. We're certainly starting to see it. U.S. new cases, I just got to throw this number out, rose to a record of more than 89,000 after 4 consecutive days of increases, and global infections surpassed 45 million. New Jersey, my home state, reporting the most COVID-19 patients in intensive care in 4 months. That's troubling.
And I just want to say on this side of the Hudson in New York, we've got Governor Cuomo holding up New York's virus response as a model for the nation, even as health experts sound the alarm with cases on the rise. So, there are things that we can do as we await a vaccine. Quite simple.
Exactly. And it's interesting. There's been a lot of great stories on the Bloomberg. Go to Bloomberg.com to check it out. But it's taking a look, and I know it's not apples to apples, and we say this every time, but what you're seeing in some Asian nations, certainly China, if you take a look at Taiwan, and I understand they've got apps and they've got a lot of regulations in place to make sure, but you've got people walking around safely without masks right now.
Carol Masser, I love your voice. What are those 3 words one more time?
Wear a mask.
You got it.
All right, Charlie Pellet, thank you so much for the assist. I really appreciate it. You're listening to Bloomberg Business Week. It is Friday. I'm Carol Masser, and you are listening to Bloomberg Radio. More on the virus in just a moment.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Belgium is imposing a lockdown to avert a healthcare system collapse. The country says its hotels must provide meals in guest rooms, and that Belgian lockdown will last for 6 weeks, beginning Sunday night. U.S. stocks lower across the board, extending their worst weekly rout since March. Earnings from the biggest tech companies disappointed investors, concerned that a slowing economy will damp profit. Apple, for example, slumping 5.8%, Amazon down 5.3%, Facebook down 6.6%, Twitter, after last night's earnings report, plunging 20%, Google heading the other direction, Alphabet, parent of Google, up now by 3.9%. S&P down 52, a drop of 1.6%, the Dow down 309, lower by 1.2%, NASDAQ down 294, a drop there of 2.6%. 10 years down 9/32, 10-year yield 0.85%. Gold down $13 the ounce, up $13 the ounce. Green on the screen there, up 7/10 at $18.80, and crude is lower by 1.5%, $35.63 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You just awakened a bunch of traders, Charlie.
Exactly.
They're like, what?
You know, and it falls into the category of the guy's got one job. Is it green? Is it red? And that's all you got to know.
You do a lot, no doubt about it. You're a busy man. All right, Charlie Pellet, thank you so much. All right, you are listening to Bloomberg Business Week. We had a bunch of headlines. Charlie and I just talked about some of them in terms of U.S. new cases topping 89,000, setting a daily record. We know global infections are surpassing 45 million. And we are seeing really Europe grappling to control a renewed surge in the disease. This as we continue to see work done and moving forward on a vaccine. Let's get to our weekly chat. I love this with Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center. He joins us once again on the phone in New York. Dr. Lustbader, nice to have you here. Ian, how are you?
Very well, thanks, Carol. Happy Friday, and definitely green is good. So up and away is always good. How are you doing?
I'm doing okay. I think it's been a jam-packed week. We're getting ready for another one on the news front because of the election, but we're also, I think there's safe to say, a new round of stress as we start to see, or we continue to see that these, virus cases, hospitalizations rise around the country, around the world. I mean, we're well into the second wave here, or at least the beginning of it in the U.S. Yeah.
Definitely. We are, as we've said before on the show, we've seen these waves with other pandemics. This is not the first or the last pandemic we'll see. Unfortunately, humans all suffer from recency bias. We're always fighting the last war. And candidly, we were, and globally, I think, unprepared. And I think we've tried to aggressively pursue this. The vaccines are coming. The preliminary data that I've seen look very good, with antibody titers. We talked about that last week,
right.
Levels that are actually higher and seem to last longer than in people who actually have the disease. Now, will every vaccine do this, and will people need more than one vaccine possibly? And we've certainly spent a lot of capital, time and energy, and billions of dollars on that. But it's so unusual to be able to get a vaccine in under a year. Usually this takes a long time. So I think we were really unprepared. Humans are always fighting the last war. But I think we've responded well. And in any war, there are winners and losers. And certainly a lot of companies are getting a lot of money. And hopefully it will be worth it.
It's interesting. We had a conversation. The cover story of Bloomberg Business Week magazine is all about Operation Warp Speed, and particularly one company that's really involved in terms of the logistics of getting this out. But what's interesting is we had some discussions, Ian, about, normally when there's a drug development, we don't hear about all the testing. We don't hear about the setbacks, which is a normal part of, creating, a vaccine, if you will, or a treatment that has to go through all the phased trials of testing. So, in some ways, there's a lot of transparency on this process, which is great, right? But it also maybe ups the anxiety about whether or not do I want to take this vaccine because it's happening so fast and there's been setbacks. But it's not dissimilar to something that often takes a lot longer.
that's definitely true. You know, the data I've seen, not to push a vaccine or another, the data that I've seen is carefully done studies, and certainly the clinical studies and phase 3 studies are not being rushed. They're accumulating patients. They're doing very careful follow-up and blood testing. So my sense is that these studies are being done very carefully, and I certainly would feel comfortable, based on what I'm seeing, to be early in line or even join a study to see how effective it is. But I'm encouraged, and I think we don't have a lot of other options. Either we succumb to shutdowns and slowing economy and a higher death rate, or we sort of step up to the plate. We've talked about last week, and we can talk again, some individual responsibility. What can we do individually while we're waiting? We can talk about that if you wish.
Well, talk a little bit about that, because I do think that's important. You know, we kid, we joke, but it's not a joke. You know, the whole idea of social distancing and wearing masks. I mean, there are things that you can do that make a significant impact.
No question about it. I just had a patient, or several patients actually, who have come in for follow-ups, and we're talking about flu shots and encouraging people to get flu shots. And there are actually rumors on the internet that the flu shot increases your risk of COVID-19, which is completely untrue. They're referring to a study previously about flu shots, and they actually help protect against several other viruses, interestingly enough, RSV and other viruses. But for some other coronaviruses, non-COVID-19 viruses, there was a slight increased incidence of them. They're basically like common cold viruses, other coronaviruses. And some people, you know, seem to think that that was increased risk, but in fact it's not. So I think we need to educate people. I think we need to reassure people, because, as you say, this is a very dynamic time. You know, the good news is that it really is a less than 5% death rate. It's about globally about 3%, and various countries are higher or lower. So it's a 97% survival rate. And again, how do we focus on that 3%? So, you know, lose weight, get your blood sugars under control, wear a mask, do social distancing, hand washing. There are individual things that we can do, and in past wars, global wars, everybody participated. There should not be this, you're on one side or I'm on the other.
I agree. I totally agree. Hey, listen, hold on for a second, Ian, and we're going to come back and talk some more, because I do want to talk to you about what's going on in Asia specifically, where they seem to have gotten this virus under control. It's a story that's been certainly dominating some of our headlines here. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Friday. I'm Carol Masser, and coming up, we're going to continue our conversation on COVID-19 and the latest headlines with Dr. Ian Lustbader over at NYU Langone Medical Center. First up, though, let's get back to Charlie Pellet and top business headlines. Hey, Charlie.
Well, hello there. I do want to begin with a sports story out of New York City. The New York City Law Department has completed its legal review of the proposed sale of the Mets. This, according to a tweet from Mayor de Blasio's office. He says New York City has no objections. The Mets can now proceed with that transaction. Stocks lower across the board. In fact, worst level of the day right now on the S&P 500 index. We've got the S&P down 67. Let me give you the numbers. I'll give you the why in a moment here. All about tech earnings, by the way. The S&P now down by 2%. We've got the Dow down 437, down 1.6%. NASDAQ is slumping 338 points, down by 3%. Stocks are extending their worst weekly rout since March after earnings from the biggest technology companies disappointed investors concerned that a slowing economy will damp profit. Right now, the 10-year down 11/30 seconds, 0.86%. Gold up 0.7%, 18.79 the ounce. West Texas Intermediate crude down 1.5%, 35.62 a barrel. The UK's drug regulator has started accelerated reviews of COVID-19 vaccines under development from Pfizer and AstraZeneca as Britain gets ready to approve the first successful shot as quickly as possible. AstraZeneca shares, they are lower today, down 2.3%. Pfizer lower now by just about 0.9%. 1 in 100 people in England now infected with COVID as cases rise. Also in the U.S., Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television.
So you've got a large number of susceptible people moving into conditions where virus spread is going to be more efficient. Now you're seeing that surge of cases. The things that worked for us in the summer are not working as well right now because the conditions in which people are gathering together and are more optimal for the virus.
And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping stocks, worst level of the day with the S&P now down 68, a drop there of 2.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. Really appreciate that. You're listening to Bloomberg Business Week. I want to get back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, on the phone in New York City. Dr. Lustbader, I thought what was interesting, Charlie, in his report talking about from the team over at Johns Hopkins, this whole idea of kind of what worked over the summer doesn't work now. I mean, the conditions have changed, especially as it gets colder. We're inside more. There's gatherings. And let's kind of throw on top of it pandemic fatigue.
Yeah, exactly. You're both of you were quite right that as it gets colder, it's much harder for people to eat outdoors or socialize outdoors, and there is pandemic fatigue to some degree. In retrospect, I believe it was actually Jeff Gundlach who had said, I think back in February, let's just close the country down for 4 weeks. Mm-hmm. That might have made a big difference, but people were certainly in New York City for several months. And there were really emotional and psychological consequences, not to mention economic. Mm-hmm. And I think that's the difference between Asia or certain parts of Asia, if we can believe those numbers, where you can lock down a city of 40 million, say no one in, no one out. Very tough to do that in free societies and open societies. So we're back to simpler methods until we get a vaccine.
Do you not believe the numbers out of China? I know we have to be smart and cautious, but do you not?
I think it's hard to know, and I think in a way it doesn't really matter because we have to deal with what we have to deal with here, which is, airplanes coming in and out and people traveling around. And honestly, the screening people with just shooting a temperature at them to check their temperature is a very inefficient. People can be harboring the virus for several days and be infectious without really having symptoms. So, and masks as well. Back in 1918, everyone wore cloth masks. and we had 50 million worldwide dead. We actually, fortunately, have much lower numbers. It's about over 1 million worldwide. So not to compare one virus to another, they're definitely different viruses, but I think it's harder in an open traveling society to lock it down quite as effectively, and therefore we have to rely on individuals taking responsibility with masks and losing weight and maybe taking some vitamin D and being healthy and using intelligence, to protect themselves.
Well, what's interesting too, and I just want to follow on that because we did have an interesting story earlier this week on the Bloomberg that just talked about a record 200 days with no local case, making Taiwan the world's envy, basically saying, that they have the world's best virus record by far. And I do, the caveat of you said, if we can trust all the numbers. But what's interesting is they did talk about closing borders early, tightly regulating travel. They do talk about rigorous contact tracing, which I feel like it's been tough to really get off the ground here in the United States. They also, though, talked about Taiwan's deadly experience with SARS and how it scared people into compliance. And I wonder how big a factor that is based from what Asia had to deal with and that knowledge, having gone through that before versus, maybe our lack of that experience here in the United States.
No, I agree. Look, Taiwan is a relatively small island.
True.
And they're surrounded by water. They can certainly seal their borders and can function independently, certainly for a period of time. I think it's less realistic in Europe and the United States to do something like that. I certainly support kind of a universal mask mandate. I think we're kidding ourselves to say that will stop things in its track, but I think simple things like that, if people would get on board, would certainly slow things until we do get the vaccine, and hopefully people will be encouraged. I'm concerned, exactly as you report, that people have hesitancy. They think Operation Warp Speed is too fast, as outlined in the Bloomberg article. I'm not sure that's really true. I do think a lot of companies have benefited financially enormously. This happens in war. Those military material suppliers always do well.
Right.
And I think in this COVID war, some drug companies maybe unfairly have been rewarded. But I do feel safety precautions have been pretty careful.
All right. And I'm just real quickly, just got about 20 seconds. Are you guys seeing at NYU, Langone, seeing an increase in cases coming into the hospital, COVID?
Slightly, but not a huge surge. So there are pockets in New York and Brooklyn and others where, there are gatherings without masks. So we are seeing a slight uptick, nowhere near what was previous, but there's still, we're still early in the winter.
All right. Always great to check in with you. Have a good weekend, a safe weekend. Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, joining us on the phone from New York City. Coming up, we're going to check in with one of the most read stories on the Bloomberg. It's also from Bloomberg Business Week, and it talks about a well-known quant firm and how they are taking your election bets. And, of course, rather timely with the election, of course, just around the corner. Let's get a check on world and national news headlines. With that, let's check in with Nancy Lyons over in D.C. Hey, Nance.
Hey, Carol. Democratic presidential hopeful Joe Biden is in Iowa holding a drive-in rally and making a last-minute appeal for support.
We know how we can build it back and build it back better with an economy that rewards work for a change, not wealth. We can do it without raising a penny tax on the middle class.
He also planned stops today in Minnesota and Wisconsin. President Trump, meanwhile, is in Michigan, talking up the economy and making fun of his opponent.
He was never known as the smart one in the Senate. He was a touchy-feely guy, little personality, had a good personality. Now the personality's gone and a lot of other things are gone.
Biden leads Trump by 10 percentage points nationally, 53% to 43%, according to an average of national polls. Most of the nation will be turning back the clock an hour this weekend with the end of daylight saving time. The extra hour of sleep is welcome by many, but for many others, it comes with a range of negative health effects. Dr. John Brownstein is Chief Innovation Officer at Boston Children's Hospital and says it may be time to scrap the time change.
While there's historically, value in energy consumption, there's real impact on things like cardiovascular disease, stroke, workplace injuries on the Monday after the time change, fatal crashes. Not only that, there's impact on mental and behavioral health.
Many states are considering or have already passed legislation to permanently stick to either standard time or daylight saving time. A person familiar with the process says Major League Baseball owners have put their stamp of approval on billionaire Steve Cohen's purchase of the New York Mets. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Carol Massar along with Charlie Pellet. And there's a couple of interesting stories that have to do with what's going in and around New York Metro, Charlie. And one has to do with New York City executives. They're commuting to work by air from their vacation homes, just like you and me every day.
Well, I was going to say, Carol, it's a good thing that they're using the helicopters because it gives me one more seat on the subway and I don't have to worry about additional people on there. There's an app that I use called Flight Radar 24, which anybody who's into aviation, they would go ahead and love that app because it lets you track whatever's flying around New York City. And very often when I get helicopters buzzing over my house in Brooklyn, what do? Go to the app and try to figure out, is that an NYPD helicopter? Is it a private helicopter? Is it a news helicopter? And it doesn't always disclose who the owner is. In fact, very rarely for the private choppers, but it's still, kind of neat to look at and find out where it's coming from and where it's going to.
Oh, totally. And this story has to do with one private helicopter and seaplane business. And it's interesting. They just talk about that all of a sudden the owner of it or the co-founder of it found that all of a sudden, I guess on Friday mornings, they started seeing planes coming into Manhattan. We're talking about from the Hudson Valley or from the Hamptons. So all of a sudden seeing a big uptick, in terms of some of the activity that we're seeing. We know it, right? New York City really kind of emptied over the summer, that everybody was working pretty much from their vacation homes, their weekend homes. They stayed there. But as we've seen, especially some of the financial community coming back, into September after Labor Day, those executives coming back, but obviously finding a different way to come in.
Absolutely. And if you can afford it, you've got the means. Why not? Quick, easy, gets you where you need to go, and don't have to fight traffic.
Yeah, there's another story on the Bloomberg by Amanda Gordon. We love everything she writes, but it talks about how the New York wealthy are returning from the Hamptons, but they're not going to stay in New York. Then it's just kind of a stopover, a little bit of a layover before they head out to Florida, maybe to their third vacation home. I don't know what you call it. All right, Charlie, thanks so much. Really appreciate it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story. Source tells Bloomberg Major League Baseball owners have put their stamp of approval on billionaire Steve Cohen's purchase of the New York Mets. Cohen was in talks to acquire the team late last year, but the negotiations broke down by February, and the owners went looking for other prospective buyers, but in the end, it was Cohen who won out to take the Mets away from the Wilpon family with a winning bid of more than $2.4 billion. Mayor de Blasio also signing off on the deal. It is a down day on Wall Street, very close to the lows of the day. In fact, a bounce just off the bottom right now for the S&P. S&P down 68, drop there of 2.1%. The Dow is down 454, down 1.7%. NASDAQ down 335, a drop there of 3%. 10-year down 8/30 seconds. 10-year yield 0.85%. Stocks dropped, extending their worst weekly rout since March after earnings for the biggest tech companies disappointed investors, concerned that a slowing economy will damp profit. CDC issuing guidelines for a phased resumption of cruises. Carnival Cruise Lines up now by 6.3%. Royal Caribbean up 5.1%. Norwegian up by 6.3%. Gold up 0.7%, 18.81 the ounce. West Texas Intermediate crude down 1.5%, 35.64 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, much appreciated, Charlie. Thank you so much. Got a great story for you all. This story, it's in the magazine this week, which is hitting newsstands online and on the Bloomberg. It's also among our most read on the Bloomberg terminal today. There's an investment angle, there's an election angle. It's about the well-known quant trader known for its interest in statistics of gambling, and it's ready to be on the other side of big presidential wagers. Let's get into it with Bloomberg News investing reporter Annie Massa. She's on the phone in New York City, and also with us, Bloomberg Business Week editor Joel Weber on the phone in Brooklyn. There's always a way to make money off of everything, it feels like, Joel.
Yeah, well, and you can spend that money on, the New York Mets if you're Steve Cohen, or, if you have other deep pockets and change, you can also wager on the outcome of the U.S. election, which basically got my attention when Annie came to us with this story. And my ears always perk up whenever she says something about Susquehanna, because that's just a company that I find very interesting for their interest in probability in the biggest sense, but that also comes down to things like games and outcomes of presidential elections. So Annie, $100 million is the cap. How much you got going into the bet?
I haven't gotten involved personally because I'm in the U.S. where it isn't legal, and this prospect they're kind of raising for people to bet in the U.K. where these kinds of political betting markets are legal. You have to be based over there. So it's not available to us today, but who knows? In the future, it could be. Sports betting obviously has been legalized in some states.
So tell us what's going on. Tell us what they're up to here.
The idea is that Susquehanna, which as Joel mentioned, has a big interest in gaming and probabilities, games like poker, backgammon, and also political betting, has this farm in Dublin that does sports betting and also betting on political outcomes. And so there are exchanges in the UK where you can bet on things like the outcome of the U.S. presidential election. And what Susquehanna is proposing is they kind of sit behind the scenes on these exchanges. And if you were a hedge fund or a big bettor based abroad in the UK, you could go to one of these exchanges and place a pretty large bet on the outcome of the election. And Susquehanna might be one of the kind of market makers on the other end, willing to take the other side.
And Annie, give us a sense of were you able to figure out how many people have actually participated in this wager yet at Susquehanna?
Yeah, it bears mentioning it has not really been picking up a whole lot of speed on Wall Street, but I got interested in this idea of whether financial firms would ever be interested one day in getting involved in more size in these political betting markets. And you can bet on all kinds of outcomes beyond just the idea of who's going to win the presidency. You can bet on, what day will the winner be called? Will it be, November 3rd, election night, or will it last, will it go out to November 4th or 5th or 6th if votes are still being counted. You can bet on, what margin will they win by, individual states and how they'll go. So there's all kinds of outcomes that you can bet on these markets. The options are kind of limitless. And I was curious to see if there's any history there of financial firms betting on political outcomes. And it actually turns out that in the U.S., up through World War II, there was actually a very big political betting market that operated on the Curb Exchange, which later became the American Exchange. It only kind of went away as polling and more types of gambling became more widespread and accessible.
Annie, one of the things that accompanies the story is, you mentioned it, this predicted data on which day of the week the election will be determined. And according to the chart that accompanied the story, it's Wednesday, November 4th. It has the most action on it. And I'm wondering, as you sort of have talked to all the people in this sort of space, do they think that the activity will ramp up between now and the end, or is it going to become a little bit more muted, since uncertainty will obviously be the name of the game?
It seems like there actually has been a bit more action in the past couple of days. As I was reporting the story, there had been a total of about $200 million bet on just the winner of the U.S. presidential election on Betfair in the UK, which is one of the exchanges. And it's been just over the course of the time that I was reporting the story out, that jumped to over 260 million. So, I mean, these aren't by any means like huge eye-popping figures by Wall Street standards. They're pretty small. But, I mean, there was a pickup that I saw even over the course of writing the story as we got closer to the presidential election.
I have to say, Annie, I do love, the UK, where they just kind of dice and slice and bet on everything. And it's certainly a different world here in the U.S. But I do wonder, could it be pending the outcome of the election itself, that changes or impacts the regulatory environment? I mean, I wonder if there is enough demand for something like this here in the U.S.
Yeah, it's a great question. Sports betting has only recently, there was a federal ban lifted on it, and now states are free to legalize sports betting. And so, you wonder whether political betting could ever come into the mix too. Something we mentioned in the story, though, is there's already evidence that regulators don't love that idea. There was an exchange that tried to list a kind of a futures derivative product based on the outcome of the 2012 election. So that would be on a regular derivatives exchange, but kind of like almost a political betting type product. And the CFTC kind of struck that down, saying, that could really get into murky territory and damage the integrity of elections. And it's not really clear what it would be used for as a hedging product. So I think that shows that maybe regulators don't have a great taste in their mouth about political betting markets just yet in the U.S.
And one other thing that just bears mentioning in your story, Annie, is that there are other ways to express bets on elections, and places like J.P. Morgan, as you write, strategists there have created a Trump basket and a Biden basket of stocks that they think could do well depending on which administration, but obviously that kind of technique has not worked in the past, based on certain stocks that end up outperforming their expectations as well, which all goes back to the idea of it's ultimately, that's why Susquehanna is willing to let you wager $1 million, because no one knows.
And all I can think about is 2016 election night when futures tanked, and then the next day the market rallied. So nothing is for sure. Joel, thank you so much. Joel Weber, of course, editor of Bloomberg Business Week, and Annie Massa, investing reporter at Bloomberg News. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is up next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Friday, October 30th. It is a down day. Stocks bouncing off the bottom. The Dow, the S&P, and NASDAQ all lower and extending their worst weekly rout since March after earnings from the biggest technology companies disappointed investors, concerned that a slowing economy will damp profit. The S&P is down 66 points right now. That is a drop of 2%. The Dow down 431 points, down 1.6%, extending its year-to-date loss now to 8.1%. NASDAQ is off 334 points, down 3%. The 10-year down 10/30 seconds. The 10-year yield 0.85%. Gold is up 0.7%, higher by $12 the ounce at $18.80, and West Texas Intermediate crude down 1.6%. $35.58 a barrel. So stocks are lower across the board. Lots of economic data today. The latest numbers on personal income and spending show a still elevated savings rate of 14.3%, money that is not going into the U.S. economy. Lindsay Pieggs is chief economist at Stifel.
Right now, consumers are looking out at the recovery. They're looking out at the prospect of a resurgence of the virus and potential further restrictions or shutdowns. And the consumer is very nervous. And in fact, rather than immediately spending that wealth, they're deploying that to their savings account and sitting on that additional savings.
Tech getting trounced today. Apple lower after it reported iPhone sales that missed Wall Street estimates and said revenue in China slumped. Apple shares lower now by 6.1%. Twitter shares plunging after the company reported far fewer new users in the quarter than analysts had estimated. Twitter tumbling now by 21.2%. ExxonMobil has warned it may take up to $30 billion in write-downs on natural gas fields acquired more than a decade ago. It also reported a third straight quarterly loss. ExxonMobil shares down now by 1.8%. So we're on track for a losing week. The Dow, the S&P, and NASDAQ are all declining, with the S&P 500 index down 67 points now. That is a drop of 2%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
So this week, the Rockefeller Foundation pledged $1 billion to help address the inequities widened by COVID-19. They're expanding access to testing and vaccines. They're also encouraging billions of dollars in investments to bring power to the more than 800 million people who don't have it around the globe. I caught up with the president of the Rockefeller Foundation and talked with him why the COVID crisis is a call to action.
It's not like we haven't had big crises before.
Right.
Great Depression, world wars, the global financial crisis of 2008, 2009. What we've learned from all of those is the path a society and an economy takes in the recovery from that crisis defines the type of nation and ultimately the type of global economy we have 10, 15 years out. If we recover the way we're currently poised to recover, which I'd say is slow, is focused on those with capital and not on those that depend on their labor to earn income, is deepening the inequities that have already been illustrated by COVID-19. Then 10, 15 years from now, we're likely to have a world that's more vulnerable to climate change and that is much, much more unequal. And I can get into that. So in the context of that, we believe we have the ability to bring people together and reimagine new solutions to human inequity and economic development and green growth. And we're committing $1 billion towards that objective over the next few years.
What's fascinating about it, and I bet somebody's hearing that and they're like, what is it? Is it committed to healthcare? Is it education? It's about electricity. It's about power, right?
Yeah, at its core, it is actually about accelerating the COVID-19 response in an equitable manner and then ultimately ending what we call energy poverty. The reason the acceleration of the COVID-19 response in an equitable manner matters so much is because the communities that have been hardest hit are lower income minority communities. There are 23 million jobless claims filed last week in the United States of America. America's 700 billionaires have made about $600 or $700 billion since COVID-19 hit, probably having the best year ever in terms of income and wealth growth for the very, very top. And, that's the path we're on because society knows how to bail out capital markets. And frankly, we don't do such a good job of bailing out working families and those who depend on their labor. And we're not against strong Fed action. In fact, we're supportive of strong economic interventions that support the capital markets. We just want to see it be more equitable, and we want to see more people who have the ability to get green jobs, have the ability to build a new infrastructure for a modern green economy.
Power, electricity, it's something, Raj, that we all take for granted, certainly in developed societies. I was blown away by one of the numbers that your team shared with me about the amount of people, sustainable sources that you guys want to bring to more than 800 million people in the world who now live without it. 800 million people. That's a huge part of our global society that are really left out. Tell us how you think you can do this.
Well, I'm glad you highlight the number. I mean, I've been working on global poverty issues in different capacities for 2.5 decades. And the reality is, people always say, well, there's no single silver bullet to ending poverty and creating opportunity. And that's absolutely accurate. At the same time, we know that the modern economy is increasingly digital and hyper-connected. And you cannot connect to that economy without electricity. So it should be shocking to people to know that 850 million people around the world live without access to 150 kilowatt hours of power a year. That means they don't have a light bulb on in their home for the course of a year. It should be shocking that probably another 1.5 billion people live in economies where the number one constraint to job growth and to small business starts is, in fact, access to reliable power that can support businesses. Unreliable power that goes out every couple of hours, you can't start a business, you can't hire people, you can't invest in capital. And I've seen these communities. Rockefeller's been investing in them for more than a decade. We now have a set of solutions to this problem that are based on green technology, artificial intelligence, smart metering, new ways of bringing capital markets to the world's very poorest people. And there's no reason why 10 years from now we could not have eliminated energy poverty and brought 1 to 2 billion people into the modern global economy in a positive, hopeful way. That's what we're trying to do as part of the recovery from COVID-19.
Raj, how do you do it? Because just this whole idea of kind of developing, and bringing electricity to so many people, $1 billion, it's a large commitment. What needs to happen? And I'm assuming you've got to bring in other partners to make it happen.
Well, you're absolutely right. It's inspired by the reality of science, technology, and innovation. We have always been an institution that believed if you worked extra hard to bring the scientific and technological frontier to the world's most vulnerable people, you could reshape the nature of human opportunity. Today, a new green revolution would actually be recognizing that the 1 billion people who live without meaningful access to power could simply benefit from new solar, battery, mini-grid, AI technologies that would allow them to connect and connect quickly. We've already served about 400,000 people in Northeast India who are characterized by extreme poverty and with whom we've pioneered new solutions that can provide solar energy at, somewhere around 20 to 25 cents a kilowatt hour.
Right, you've seen it work, right? You've seen this work already.
Oh, yeah, we've rolled out hundreds. We actually have a $1 billion joint venture with Tata Power in India to roll out 10,000 of these. Not only do they work technologically, they work from a commercial perspective. The business we started with Tata Power should and will both sustain itself and frankly be profitable over time.
And of course, that was Dr. Rajiv Shah. He's president of the Rockefeller Foundation, and I caught up with him virtually, of course, at the Toronto Global Forum. And their theme of the forum, and it was bringing in leaders from all walks of life from around the globe and talking about forging a resilient economy. And he was just really getting to a basic, need that you provide power, provide electricity to an individual or an entrepreneur, certainly in those emerging economies, and you really change their life and certainly make them a part of the global economy. So check out that full conversation. You can search on Toronto Global Forum and you could hear a little bit more of their announcement and their plans for really ending what is known as energy poverty. You are listening to Bloomberg Business Week on this Friday. I'm Carol Masser, and this is Bloomberg. Let's get another check check on world and national news. For that, it's over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. The Midwest is ground zero for both presidential campaigns today. President Trump is promising supporters in Michigan that he's delivering the great American comeback from the coronavirus, and he deserves their vote.
4 days from now, we are going to win this state, and we are going to win 4 more great years in the White House.
Democratic presidential candidate Joe Biden stopped in Des Moines, Iowa, and urged a drive-in rally crowd there to keep the faith.
In the final days, please keep your sense of empowerment. Keep your sense of optimism of what we can do together, because you know we can do anything.
Well, the first billionaire presidency appears to be paying off for the nation's billionaires. Bloomberg's Nathan Hager reports.
More than 160 Americans are tracked on the Bloomberg Billionaires Index, and they saw their collective wealth jump from less than $1.8 trillion on election night 2016 to more than $2.8 trillion as of last week. Reed College economist Kimberly Klossing tells Bloomberg President Trump isn't responsible for many of the long-standing factors driving inequality, but she says the president's policy changes have exacerbated rather than dampened the trends, including the 2017 tax law. Nathan Hager, Bloomberg Radio.
It looks like more Americans are planning a scaled-back Thanksgiving this year. Kroger, the nation's largest grocery chain, says its research shows 43% of shoppers plan a smaller dinner with just immediate family. To accommodate the shift, the chain says it will have 30% more turkey breasts available for those who don't want to cook the whole bird. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser. And one of the stories that's trending high on the Bloomberg caught our attention has to do with one of the legendary private equity firms. We're talking about KKR. And they apparently invested a record $6.2 billion, a record amount of capital during the third quarter. And basically, a lot of it had to do with taking advantage of the volatility and turmoil that has really been brought about by the COVID-19 pandemic. Well, Henry Kravis, of course, co-founder of KKR, spoke to Bloomberg News' Jason Kelly in an exclusive interview today from New York. And they both talked about, and Kravis addressed, that unprecedented volatility that he's seeing in the markets. Listen up.
So we're experiencing volatility like we've never seen. You know, just look at our markets in the U.S. We're up one day 300-400 points, and then the next day, for almost no reason, we're down 400 to 500 points. Any news coming out of the pharmaceutical industry on progress with a therapeutic or with a vaccine is changing sympathy in the markets. If you have a test going and all of a sudden somebody becomes ill and it doesn't work, they have to slow down the testing that they're doing. All of a sudden, markets react. And so today, I don't remember a time, and I've been investing for over 50 years, I don't remember a time when I've seen such volatility as we see today.
And of course, you were listening to Henry Kravis, co-founder of KKR, speaking to Bloomberg News' Jason Kelly in an exclusive interview here in New York City. And again, just talking about advantages that they've been able to really use because of the volatility in the markets, and as a result, making some investments. You are listening to Bloomberg Business Week, and this is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A down week, a rout underway again on Wall Street. Stocks trading close to session lows. Let's head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks are sinking today amid large cap tech weakness. Dow's currently down 400 points. S&P's dropped 64. NASDAQ is lower by 2.9%. Those FANG stocks, they're down 5.9%. The U.S. the 10-year yield jumps to 0.867%. Oil's down 2%. Gold is up 11, and transports fall 168 points. Among the main 11 SP sectors, all were in the red, led by declines in consumer discretionary, tech, and telecom, while leaders to the upside on Dow, IBM, and Walgreens, Apple, Nike, and Boeing led to the downside. After earnings, Facebook fell 5.7%, Apple dropped 6%, and Amazon is down 5.6%. Wrapping things up, the cruise operators spiked intraday after the CDC issued guidelines for a phased resumption of cruises. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And so it's just now about 3 days to the official start of the official election day in the United States. We know millions, as we've been reporting, have already voted. Our top story at this hour, watching what's really going on from the campaign trail and watching that early voting. Jordan Fabian is Bloomberg News White House correspondent, and he joins us on the phone in Washington. Jordan, it is good to have you here with us. A lot going on. Those candidates are out there in full force on the campaign trail. What's the latest and what are we hearing?
The president and vice president Joe Biden, both just wrapping up remarks in Iowa for Biden and Michigan for Trump, and they're going to be barnstorming today and through the weekend in the lead up to Election Day, both the candidates trying to get those few remaining voters who might remain undecided or haven't yet gone to cast the ballot either through the mail or early to get their votes in.
Yeah, and I mean, it's really kind of fascinating to see, how much is going on right now. But, these are all of those key states. How close is it still when it comes to the races in some of those key battleground states?
Well, the polls show that Vice President Joe Biden has leads in virtually every battleground state that he's competing in, maybe aside from North Carolina and Florida, where the polls show that it's within the margin of error. But the margins are still not comfortable for Biden to a point where he would say, I'm just going to kind of sit at home. Look at Pennsylvania, a state that's key for his pathway to victory. The polls average show that he's up there maybe 3 to 4 points. So he would obviously like that number higher. He's going to be going there over the weekend for a number of rallies, as is President Trump. So Pennsylvania looking like a really maybe the key swing state. And so both candidates are going to spend a lot of time there between now and Tuesday.
Is it still, though, a case when we talk about Florida, Jordan, that, President Trump can't win without it? And is it still the same case for Joe Biden?
So President Trump probably cannot win without Florida. There is a pathway for Biden to win without Florida, but you really need to win in pretty much every other battleground state, including Pennsylvania, in order to make that happen.
It's also interesting to, we've been watching early voting. I've talked with a lot of colleagues, and I'm sure you have too, as you watch them, just the lines that are everywhere and the amount of hours that you need to, sit online to vote. But people are doing it. What are we hearing, when it comes to that early voting? Is it longer lines? What are you hearing?
Yeah, there are longer lines, and more people are early voting in general. I think the pandemic has sort of changed Americans' behavior when it comes to voting, both in person and through the mail. And I think Democrats are trying to define that usually the early voting in the past has benefited them. Right. But we're in such uncharted territory now that I think both parties are sort of trying to figure out what are the numbers looking like? Who does this really benefit? So they're looking at the counts in Texas and Florida, Pennsylvania, and places like that to see where they can get an advantage.
I am, we've had a lot of conversations, as I'm sure you guys have in the D.C. Bureau, about Election Day, and that we do expect not to have maybe a decision come the end of Tuesday night. Is it really more of a Wednesday morning story, or what kind of guidance are you guys hearing about that?
Yeah, so I think it's going to be unclear, possibly. I mean, we really don't know. I mean, again, we're such uncharted territory, but it's very possible that we really won't have a clear result on Tuesday, and possibly into Wednesday too, just because it takes states longer to count these mail-in ballots that are coming in. And so you might have a situation where the day of results are counted before mail-in ballots in certain places. So just judging from past patterns, Republicans tend to vote on Election Day, Democrats tend to vote early. There could be a scenario where it looks like President Trump is leading in certain places, but once the mail-in ballots come in, his lead could either be narrowed or go away completely. So we're all going to be watching very closely to see how these returns come in on Election Day and going forward.
There's so much, I feel like, when we wake up every morning, Jordan, that there's so many things when it comes to the campaign, the election, that we can all kind of go to. It's interesting. We had a conversation earlier this morning with our Michael McKee and said, how during the Clinton campaign, we all talked about it's the economy, stupid, right? Or with other past campaigns, that's been the driving force. But this time it's really kind of the virus, stupid. And I do wonder, that continues to be certainly a guiding force in terms of maybe how people might ultimately vote come Tuesday. Or already voted.
Yeah, I mean, all signs indicate that the pandemic is the dominant issue in this election. And you have a dynamic where you have one candidate, Joe Biden, who's made the centerpiece of this campaign, talking about what he would do better than the president and criticize the president for really having a failed response. Then you have the president downplaying the virus most of the time and trying to talk about other issues, trying to paint the Biden family as corrupt, and et cetera, et cetera. And, the president's advisors, we've heard they try to get him to focus more on the economy and how it's rebounding from the virus and also his own virus response. But he said out loud at a rally yesterday that he thinks basically that's boring, that he'd rather talk about allegations of Hunter Biden and how the news media is out to get him. So I think there's some advisors on the president's team were frustrated by his closing argument.
All right. Listen, Jordan, I know it's busy for all of you guys and the whole D.C. team, so thank you so much for finding some time for us. Jordan Fabian, Bloomberg News White House correspondent, and our thanks to our listeners, too. We know that line was a little rough, but we certainly did want to hear what Jordan had to say. All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week on this Friday. I'm Carol Masser, and coming up, we're going to check in with Dave Wilson. His not stock of the day, but his chart of the day. Stock comes later, but he's checking out Exxon. So we'll get to that in just a moment. Right now, back to your top business stories. Here is Charlie Bell.
Hi, thank you very much. And here's what's going on. ExxonMobil shares lower now by 1.6%. This is crude oil slumps down 2.2% right now on West Texas Intermediate crude down 79 cents a barrel, 35.37. We've got a stock rout underway on Wall Street, losing week right now. The S&P, as I look at the weekly numbers, down 6.34% on the week. Second losing week in a row. Right now, though, the S&P is down 2%, lower by 67 points. I'll give you the why in a moment. The Dow down 417, down 1.6%. NASDAQ lower by 341 now. That is a drop of 3.1%. The why comes down to one word: tech. Stocks dropped, extending their worst weekly rout since March after earnings from the biggest technology companies. Disappointed investors concerned that a slowing economy will damp profit. Among those tech names, Apple plunging 6.3%, Amazon down 5.7%, Facebook tumbling 7.4%, Twitter hardest hit of all after earnings last night. Twitter now down by 21.6%. Google, by the way, on the plus side. Alphabet, parent of Google, up now by 2.9%. The UK's drug regulator has started accelerated reviews of COVID-19 vaccines under development from Pfizer and AstraZeneca as Britain gets ready to approve the first successful shot as quickly as possible. AstraZeneca ADR is down now by 2.1%. Pfizer shares tumbling today by 0.5%. 1 in 100 people in England now infected with COVID as cases rise also here in the U.S. as more localities tighten restrictions to slow the virus. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health, and he was interviewed this morning on Bloomberg Television.
If we put something in place now in terms of greater public health interventions, we won't be seeing the effects for another week to 2 weeks. So this is where action right now is really going to be important. It doesn't have to be a complete lockdown like we had before, but we should be using the data that the testing is giving us, that the contact tracing is giving us, to provide much more targeted interventions to slow the spread of the virus.
And the Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, recapping stocks close to lows of the day with the S&P down 69 points, a drop of 2.1%. I'm Charlie Pellet. Bring on the song of the day. That's a Bloomberg Business Flash.
Favorite time. Thank you so much, Charlie Pellet. You are listening to Bloomberg. Is this, God, it's real rock.
Oh, yeah.
There's like a million names that are coming to mind, and,
well,
I don't know. What
letters.
Think what? Letters?
Think letters.
Think letters.
Yeah.
I don't know.
Powerful letters.
Powerful letters. I don't know, Dave.
AC.
DC. Nicely done. Oh, really good song. Well done, because you're talking about ExxonMobil.
Yeah, and how it's, in a sense, back in black. I mean, it just goes to show you how crazy 2020 has been, in that, you know, you had this company, ExxonMobil, biggest U.S. oil producer, once the world's largest company by market value. And you go back about 2.5 weeks, you see that it fell below the value of Zoom Video Communications. You know, that video conferencing company we all refer to Zooming for this and that and the other thing. You know, they've only been public for about 18 months. And yes, Zoom became more valuable than Exxon. Or if you want to turn it on its head, Exxon became less valuable.
Isn't that wild? Can you just stop there for a second? That's just wild, Dave.
Isn't it, though?
Right, changing times, but I don't know. Yeah.
And what else is wild is that the equation reversed itself yesterday after Exxon came out and said they were going to cut 15% of their global workforce.
Ouch. Yeah.
So actually, Exxon became more valuable as of yesterday's close, just a couple $100 million, basically. Today, the gap has widened out, so it's not going to be just a one-day phenomenon, as it turns out. You heard Charlie Pellet talking about how ExxonMobil is lower on the day by 1.7%. But even with that, it's got a market value of $137 billion. Zoom has taken a real hit, along with a whole lot of other tech companies, as you've been talking about. It's down 6.4% as we speak. And just to get an updated figure on their market value, it is just above 130 billion. So the gap, which was, like I said, a few $100 million yesterday, is closer to 7 billion today. I mean, these things do go back and forth, no question. But it just goes to show you, like I was saying earlier, old economy, new economy. We don't talk in those terms anymore because it's like, the tech companies have become so large. It's like they are the economy for a whole lot of people at this point. But, Exxon's been around for decades in various corporate configurations, you might say. And, its value is just kind of shriveled over the past several years.
Well, think about changing fortunes, right? I mean, first of all, fracking, I mean, we've just had so much more in terms of supply. And lately, the demand equation, because of the pandemic and just even the economy, things have, fallen back. So it's not a great scenario for, for them at all.
Yeah, and then on top of that, you think about the whole shift toward electric cars.
Exactly.
Promoted by Tesla, supported certainly by GM, Ford, and a whole lot of other automakers. So things are not going their way. And, as we're all stuck at home, we want to see other people. So we sign up for Zoom and we, take part in the video conferences. And, demand is just off the charts. In any case, speaking of charts, if you want to see this chart, and the explanation that goes with it, and all my future charts, you can send me an email at dwilson@bloomberg.net. That's dwilson@bloomberg.net.
You can have a Dave Chartapalooza if you want.
You could.
Can I just tell you, I just went to the FA page on Zoom. I mean, just because there you are talking about $100 billion market cap. I mean, this is a company that is expected to have, I think, about $2.4 billion in revenues. And it's got 100 billion market cap. And I've increasingly, including...
So you're talking, what, 55 times sales?
Yeah, it's pretty wild. And increasingly, I'm having conversations with people who are like, I'm done. I'm done with these. Like, I'm tired of having them. So, it's just something to think about because we are wondering what the lasting impact of that will be post-pandemic, So you do wonder, and that plays into what their business might be after we get through this.
Oh, absolutely. I mean... You really don't know what this company is going to be, 2, 3, 4 years down the line when we're back to whatever passes for normal. Then it's going to be a very different environment for us in general and for Zoom in particular.
All right, definitely check out Dave's chart of the day. He's going to be back a little bit later on with his stock of the day. All right, let's get back to world and national news. For that, it's over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. President Trump and former Vice President Joe Biden are campaigning in the upper Midwest today as they pick up the pace of their sprint to Election Day. Trump started off with a rally in Michigan, touting yesterday's GDP report on annualized growth.
I used to talk about the V. This is a super V. This is the biggest number, 33.1, and the news doesn't want to talk about it because it's positive.
The rebound, while historic, did not bring us back to where the economy was before the pandemic. Trump also is making stops today in Wisconsin and Minnesota. Well, Joe Biden spoke first to a drive-in rally in Iowa.
Honk if you want America to lead again. Honk if you want America to trust each other again. Honk if you want America to be united again.
Biden today will also be traveling to Minnesota and Wisconsin. A new poll shows most Americans disapprove of President Trump's packed campaign rallies during the pandemic. The USA Today Suffolk University poll finds nearly 60% of respondents turning thumbs down on the rallies as the virus surges. Michael Skakel will not face a second trial in the killing of Martha Moxley. It's been 45 years since she was found bludgeoned to death outside of her suburban Connecticut home. Prosecutors say they're closing the case. Skakel is the nephew of Robert Kennedy's widow, Ethel. The victim's brother, John Moxley, seems okay with today's decision.
I don't think Michael Skakel is the devil. I think that he did something in a fit of jealous rage.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, and as you know, we've been going through a lot of earnings. We're smack in the middle of it. We've been focusing a lot on the tech earnings that we got after the closing bell, but we also did hear from Starbucks after the close yesterday, and they capped off their fiscal year with better than expected quarterly results as the key U.S. and Chinese markets inched closer to growth. The stock, though, down a little bit, down about 2%. It's down about 1.65% this year. Our own David Weston caught up with Starbucks CEO Kevin Johnson. They talked earlier today about how safety precautions have enabled the recovery of many of their stores during the pandemic. Check it out.
Well, you know, the fact that we've built these store protocols and sort of we've woven these protocols into the operational capability in our stores, and this recovery has unfolded even as we've seen COVID cases surge. And so, you know, I feel pretty confident that, you know, we know how to operate in the world of COVID, even before there's a vaccine and therapeutics. Certainly, you know, we look for that day when there is a vaccine and therapeutics, because once that happens, then we think there's a huge wave of demand that we will see even far beyond this recovery. But I'm pretty confident that in our recovery, we've built a more resilient company, and we know how to do this, even with the spread of COVID.
And that was Starbucks CEO Kevin Johnson talking to Bloomberg's David Weston earlier today, talking about some of the safety precautions they've taken. Listen, we're watching all of these companies to see how they are dealing. Interestingly enough, I caught up to with the CEO of Chipotle earlier and talked about, you know, we have seen the consumer hold up fairly well. There are some concerns, though, as these virus cases start to spike again, whether or not we'll see some impact of that. So watching very much the consumer, and obviously that impacts something like a Chipotle, also a Starbucks. Starbucks did give some insight going forward. They say it gets better from here, and they're forecasting global comp sales will grow between 18 and 23% during the first quarter and 2021, and they're expecting growth as high as 32% specifically in China, so some overseas growth there for them. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellett. 13 minutes to go ahead of the closing bell with the Dow, the S&P, and NASDAQ all lower. Slight bounce off the bottom. Emphasis on slight, but it is a down day across the board. Stocks are slumping after technology earnings underwhelmed. For example, Apple down 6.3%, Amazon down 5.8%, Facebook down 6.9%, Twitter is plunging 21.5%. The lone exception, Alphabet, parent of Google, up now by 2.8%. S&P down 60, a drop of 1.8%. The Dow down 349 points, down 1.3%. NASDAQ lower by 335 points. That is a drop right now of 3%. 10-year down 12.30 seconds. The 10-year on this Friday now 0.86%. We've got gold up 0.6%, 18.79 the ounce. And West Texas Intermediate crude down 1.7%. Lower by 63 cents a barrel, 35.54 a barrel. I'm Charlie Pellett. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just got about 11 minutes left in today's trading day, getting ready to wrap up the entire week, and we know it's certainly been a tricky one for equities. Back with us for the drive to the close, Ryan Dietrich, senior market strategist at LPL Financial. They've got roughly $800 billion in assets under management. Joining us on the phone from Charlotte, North Carolina. Ryan, nice to have you back with us. Before we get into the markets, there's so much going on, but I do want to ask you, how's it going in Charlotte?
Hey, Carol, thank you for having me back. Things are going all right. You know, we had that hurricane come through just yesterday, and literally schools were canceled. Tons of wind, and it was you know, a rough day. Kind of summarizing 2020, I think, for sure. But overall, you know, we're slowly kind of doing things. My daughter is A-Day, B-Day right now in January. I think they're going to go to full time, although obviously we can talk about all the cases that are spiking. That might change, but we're hanging in there, I guess, down here in Charlotte's best way to put it.
Well, that's what I wanted to ask you. I think, you know, certainly as individuals and certainly as investors, we're trying to gauge, okay, how things are going, what we're seeing in terms of these virus cases, because it's all connected, right? What happens with the virus is certainly impacting our world, our health, our economy, and really gives us an idea of maybe what's to come over the next few months. And ultimately, it'll play out in the financial markets as well. So what are your expectations? Because you are watching those numbers go up.
Yeah, I mean, you know, and let's not forget, I mean, financial markets, they tend to lead, right? I mean, they tend to kind of react before the economic data, honestly. And just today, I mean, the thing that got us today was that consumer spending number up 1.4% month over month in September. We've got 5 straight months of at least 1% gain in consumer spending. We've never seen that. That data goes back to the 1960s. Now, I'm aware that's because of a huge drop in March and April. But the one thing I think is guests come on with you, and as we talk with our LPL advisors, everyone is so surprised at the resiliency of the U.S. consumer. I mean, we know the economy is not perfect, but they make up 70% of GDP. We all know that GDP number yesterday. So the consumer, with all the bad things that are happening, is still spending, and that is one big positive, we think, as we head into 2021, and likely the economy continues to expand.
Do you think it continues, though, that especially if we see another shutdown of some sorts? We're still waiting on some kind of stimulus. Who knows if we ultimately get it? I mean, there are people out there, you know the stories, and we've talked with it before, people who are just, you know, barely getting by, just trying to pay the rent or put food on the table.
Absolutely, and you know there will be help coming for them. Unfortunately, I think it's taken a lot longer. Remember, we all thought it'd be August 6th when Congress went to the summer recess. Well, that didn't happen. But you know, just looking at the market signals, right? I mean, if you look at copper, I mean, copper has been really strong. Copper versus gold has been strong. That's normally a sign of an improving economy. Look at the 10-year yield today. 10-year yield's up today. We had that big down day the other day. 10-year yield was higher. So bond market is maybe telling us a little bit, and are we listening to it, that, hey, yes, stocks are volatile. There's an election next week. There's COVID, all these concerns. We get it.
But the bond market and the credit markets, they're still suggesting potentially, an improving economy, which I know is a little opposite to what people expect, but I'm not going to ignore what the bond market's saying here.
Yeah, it's interesting. We've been talking to you about the gold trade, that you would anticipate that everybody would be running to gold, and yet we haven't necessarily really seen that play out. So let me also ask you about the tech earnings, right? There's been so much momentum in the financial markets this year, thanks to the tech sector. A slew of earnings: Facebook, Amazon, Apple, Twitter. How do you assess the results that we got and what it tells us about maybe their fortunes to come, especially like maybe over the next 6 to 12 months?
Absolutely. Well, we still like technology the next 6 to 12 months, but right here and right now, I think it tells us that bar was awfully high, because what they said wasn't all that bad. But boy, those stocks are really getting pounded right now, as you just discussed. And it makes sense to us that maybe there's a little bit more of a correction in technology here. But again, when you look out into next year, technology is still one of those areas that are going to have a lot of earnings growth. And don't forget, historically speaking, when you have a low inflation, low growth, low rates world, what tends to do well in that scenario? It's growth stocks as investors reach for growth, and specifically technology. So we'd actually think about using this pullback in tech recently as an opportunity to potentially add to positions that you're willing to hold the next 6 to 12 months, is how we're viewing it right here.
So it sounds like you still like the growth play, not necessarily the value play.
Yeah, we definitely still side with growth a little bit over value, but at the same time, we're saying maybe take a barbelled approach. Stick with who got us here: communications and the growth names and tech names. But on the other side of things, those industrials and materials still look pretty good. We're not too warm and fuzzy about financials. That's another part of the cyclical value trade. But industrials and materials, really, as the economy comes back, and if we get more, we're going to get an infrastructure plan, likely whoever wins this next election next week.
You think so? You think so?
Yeah. We do. We think it would probably be a bigger infrastructure plan, obviously, if Joe Biden wins. But we do expect if President Trump were to win next week, sometime in 2021, we'll probably get an infrastructure bill. It won't be quite as large, but that could still be a tailwind for those industrials and materials, which have done quite well the last 3 months.
So I don't know, I'm curious about the discussions you guys are having, Ryan, when it comes to the election. Listen, you can look at history and you can look at, trends, but I do wonder if something maybe is a little bit different this time around because of COVID and the impact on the economy. But how do you see the election, the outcome, potentially impacting the markets?
Yeah, in the near term, historically, you get a little bit of a sell-off ahead of an election. We're seeing that. And then once you get the election out of the way, markets tend to rally once that uncertainty is relieved. But, what are the four most dangerous words in investments, right? This time is different. We all know that. But boy, oh boy, this time sure does feel different with COVID and all the different scenarios that are out there. Our big take is this: whoever wins this election as we head into 2021 has an economy that's slowly expanding, that's likely not going to be in a recession, that might see 20% earnings growth in large caps and almost 100% earnings growth in small caps. That's a pretty good elixir for higher equity prices. And to kind of put a bow on this, in 2016, a lot of people didn't like President Trump for 4 years. There's been almost 150 new all-time highs in the S&P. For 8 years of President Obama, they didn't really like him or his policies potentially. The stocks did well then. So it's important to separate who you're voting for with really your investments. It's a very important thing to remember there.
All right. Yeah, it'll be an interesting week. Do you expect volatility next week because of the election outcome, or not necessarily?
No, we do. You look at the VIX. The VIX has obviously been quite high, so we think a little bit more volatility next week is probably going to be in the cards, unfortunately, for investors. But again, it's an opportunity because we're probably not going to have a recession next year, and that's still a chance to add to positions from a longer-term point of view.
All right, a little bit of optimism there. All right, Ryan, thank you so much. Ryan Dietrich, he's Senior Market Strategist at LPL Financial, joining us on the phone from Charlotte, North Carolina, where, again, another part of the country where they're seeing those virus cases go up. They've got about $800 billion in assets under management. We've just got about 4 minutes left in today's trading session. Quick recap of the markets, and we've got the S&P down about 55 points, a decline of 1.7%. The Dow Jones Industrial Average, it is off about 1%, down about 279 points. And you're looking at the NASDAQ really taking the biggest hit on a percentage basis, those big, large cap, momentum, tech names. We broke them down yesterday after the close. As Ryan said, the results weren't so bad, but investors not so keen and maybe a little worried about the run-up that we've seen already in those names. NASDAQ's down about 2.8%. Stick around. We've got the closing bell in just a moment.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Friday, October 30th, and it is on to the weekend. Folks from SQZ Biotechnologies ringing that closing bell. The Dow, the S&P, and NASDAQ all slumping. Stocks extending their worst weekly rout since March after earnings from the biggest technology companies disappointed investors, concerned that a slowing economy will damp profit. Now again, on the week, the S&P tumbled 5.72%. Today, the S&P dropped 39 points, down 1.2%. The Dow at the close, off-session lows, down 153 points, down 0.6%. NASDAQ down 274, a drop there of 2.5%. 10-year yield right now 0.87%. The 10-year down 15.30 seconds. Ryan Dietrich is senior market strategist at LPL Financial. He was our guest moments ago right here on Bloomberg Business Week.
So bond market is maybe telling us a little bit, and are we listening to it, that, hey, yes, stocks are volatile. There's an election next week. There's COVID, all these concerns. We get it. But the bond market and the credit markets, they're still suggesting potentially, an improving economy, which I know is a little opposite to what people expect, but I'm not going to ignore what the bond market's saying here.
And again, worth repeating on the 10-year, the yield now 0.87%. Twitter closed down 21% today, posting its worst day since 2014. Twitter plunged after the company reported far few newer users in the quarter than analysts had estimated, dashing optimism that the social network would benefit from a return of live sports, also next Tuesday's election. Again, Twitter shares plunging 21.12%. Apple dropped after it reported iPhone sales that missed Wall Street estimates and said revenue in China slumped. Apple lower today by 5.6%. Among some of the other tech decliners, Amazon down 5.5%, Facebook down 6.3%. Again, recapping stocks lower across the board with the S&P down 39 points, down 1.2%. I'm Charlie Pellet.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
Yes, indeed. Time to take a look, a little bit of a deeper dive into the market trade. Charlie, of course, breaking down those closing numbers. Lucky to have with us our own Vince Signorella. He's Bloomberg News Global Macro Strategist. He's on the phone in White Plains. And, of course, he contributes to the Squawk, Macro Squawk Desk, a real-time curated news that's audio streamed directly through your terminal. Check it out at Squawk Go on your launchpad. Vince Signorella, it has been such a day that I have a sandwich sitting still on my desk, which is supposed to be my breakfast and my lunch, and I still have yet to get to it. No, I don't want sympathy. It's kind of how crazy it's been.
It's a crazy day.
Yeah. So trick or treat, what do you make of the trade this week?
Well, actually, the close looked a lot better than I thought it was going to be, which should give some traders some encouragement for the Sunday Open and to see how we play into next week.
We ticked higher at the end. I saw like the last few minutes.
Yeah, we grabbed it. We just took 150 points off the Dow or back onto the Dow in the last 15 minutes or so. Yeah. This is all algo. This is all machine trading. Probably just picking up some profits, taking back some shorts into the weekend, just trimming positions. Going to see a lot of vol, I think, over the next couple of trading sessions as we head into the election. There's no real, despite the polls, and the traders are seeing this as getting a lot tighter. Mm-hmm. The swing states are getting a lot tighter. There's very much a fear of a contested election potentially coming on after Tuesday, and that we won't have a winner at all on Wednesday or Tuesday night. Yeah. There won't be a clear-cut winner. And, just not good for risk when you have all that uncertainty.
Vince, I always wonder, we spent so much time talking about that we might not have a decision, or there's a good chance we won't have a decision, Tuesday night. And I do wonder, traders, even though we've been talking about it, we're anticipating it, when the reality hits, it's a different thing.
Mm-hmm. And I think, everybody's focused on the presidential election. And I think the Senate may be a bigger story when it comes to the stimulus. If the Senate stays Republican, I don't think there's any motivation for them whatsoever in a lame duck Congress to go big. They'll, I think, stick to where they are on the skinny deal, and wait to let the next cycle start. They get, the Senate and the Congress sworn in on January 3rd, not January 20th. So they can move a little quicker if they choose, assuming that the presidency does change hands. If it does not, then you're going to have a really interesting discussion between McConnell and Trump. You will see a stimulus bill, but the size of it will be questionable. I mean, does McConnell pushing and looking ahead to the 2022 midterms would want to take credit for a big stimulus bill to try to maintain the Republican majority in the Senate. So it could swing in a positive direction for the equity market, likely a negative direction for bonds. The bigger the stimulus, the bigger the national debt, most likely the higher the interest rates go down the road.
Right, which is something that we've been watching. It's interesting. We had a market guest who said that despite, some of the selling we saw in the equity markets, you actually saw, I think, yields move up a little bit today. Like, you're not seeing necessarily investors run for the exits when it comes to all of the different asset classes that are out there.
No, but I would not see the higher yields, to be honest, as a positive. I think the markets are looking at more from a negative standpoint, that they're going to see a big boost in potentially the U.S. debt markets, and those higher yields. Hopefully, if they come at a time when we're seeing slower growth, it's just not a good place for the Fed to be.
It's interesting, right? Because I think back, you remember this, I remember this. For years, we talked constantly about the U.S. deficit and debt, and then it kind of went away, even after the downgrade, of the U.S. several years ago. But it's just interesting that it's kind of creeping its way back in. Do you think it could be potentially, problematic?
Eventually. I mean, the reason why it's not a big deal and no one's talking about it is because you're not seeing inflation.
Yeah.
As long as you don't see inflation, you can put on as much debt as you want, because it's, you're borrowing at low rates. It's not affecting the consumer. When you start to see inflation, which is more of a psychological effect, really, where people start to worry that the price of XYZ is going to be higher down the road, then you might see it. And one of the places you might get it coming from is actually the housing market. As more people with the COVID situation are looking to move out of major cities, the burbs are getting priced higher and higher and higher. You're seeing like 40% increase in prices in the Hamptons.
Yeah.
Not that I'm going there, but there you go. That's good for them. I will tease up something I'm writing for the blog over the weekend, though.
Please.
It's one thing that no one is talking about, and that's the odds of it are relatively slim, I must say. But Rasmussen Reports has this election within a couple of points of a statistical error. They see the race as Biden 49, Trump 46 at the moment. They have the exact same prediction in 2016. They were one of the few who called it correctly. If they're right again this time, you need 270 electoral votes to win the presidency. If neither candidate gets it, it becomes a contested election from a standpoint of the House chooses the president, the Senate chooses the vice president.
All right, got to run, got to get to the stock of the day, but we'll check that out over the weekend. Vince Signorella, thank you so much. All right, Dave Wilson, what do you got for the stock of the day?
I got Acadia Healthcare, Carol. They operate mental health and addiction treatment centers across the U.S. and the U.K. and also in Puerto Rico. Acadia was founded in 2005, went public in 2011 by merging with a smaller peer. The ticker is ACHC. Now, Acadia's shares peaked in 2015, worked their way lower. They were down as much as 67% this year, and then they made back the entire loss, backed off in the last couple of weeks, and today they reversed course again. Third quarter results were well received. Earnings beat analyst average estimate in the Bloomberg survey by the most in any quarter since 2015. Earnings also surpassed projections. The company cited rising demand because of the mental and emotional toll of the coronavirus pandemic, along with other concerns. Now, the report sent Acadia Healthcare shares to their highest price since November 2018. They closed with a gain of 23%, the biggest for the stock since March.
Man, this is why the pandemic just impacting companies differently. Dave, that's a great stock of the day. Thank you, thank you, thank you. Have a great, great weekend. Dave Wilson with the stock of the day. Acadia Healthcare, ticker is HCHC. All right, let's get another check on world and national news. For that, we turn things over to Denise Pellegrini in our newsroom. Hey, Denise.
Hey, Carol, thank you. We got President Trump rallying supporters in Michigan, Wisconsin, and Minnesota today, and polls suggest the president's actually trailing Joe Biden in all three of those swing states. He was at a rally in suburban Detroit, the president predicting victory.
4 days from now, we are going to win this state, and we are going to win 4 more great years in the White House.
And Joe Biden also crisscrossing the Midwest. He slammed the president for failing to lead. He says he made the pandemic worse and he lost Iowans their jobs.
Here at the fairgrounds, the Iowa State Fair canceled for the first time since World War II, and Donald Trump has given up.
Meantime, health officials in New Jersey, Connecticut, and parts of the Midwest are eyeing rising COVID-19 numbers. And Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center, telling us here at Bloomberg Business Week that things are promising on the vaccine front, though.
It's so unusual to be able to get a vaccine in under a year. Usually this takes a long time. So I think we were really unprepared. Humans are always fighting the last war. But I think we've responded well.
And Governor Cuomo today establishing protocols that would allow kids in COVID hotspots to go back to schools. And a source tells us that Major League Baseball owners are putting their stamp of approval on billionaire Steve Cohen's purchase of the New York Mets. And some reports now say that Mayor de Blasio now has no objections to this deal after all. Now, if this is finalized, it would mean that Cohen would immediately become the richest owner in baseball. He has a net worth of more than $10 billion, according to the Bloomberg Billionaires Index. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. And yeah, you can buy a baseball team with that. I'm Carol Masser along with Charlie Pellet, right? It makes it a little bit easier. Not sure if you saw one of these stories, this story that's trending among our most read, but it talks about rents are falling in many U.S. cities and rising in many suburbs. I mean, this is what we're seeing, Charlie, going on in terms of a rotation when it comes to real estate. Vince Signorello was just talking about some of the trends that are going on.
Absolutely, and it's getting so good that, listen, this weekend I might put on a mask and go out and look at apartments, either
Seriously?
that or do it virtually. Yes, I mean, the deals are absolutely amazing. A couple of weeks ago, I was riding around Manhattan on a city bike with a mask on with a friend. She needed a new apartment. We looked at a place on the west side of Manhattan looking down along the Hudson River. I'm not mentioning numbers, but all I can tell you is they were throwing deals at us in terms of free month's rent, throwing in a health club on premises. The views were spectacular, floor to ceiling glass windows. It was a corner apartment. It would have been too small for me, my wife, and the dog and the cat, but it was, I'm looking at that. And then they got areas on the roof where you can throw parties, so I could have the Master family over. It looked amazing.
Well, that would be lovely. That would be very lovely. And it's interesting, this story Charlie talks about, the number of apartment listings in New York's most expensive borough has tripled. We're talking about Manhattan, has tripled from last year. It's the highest figure for vacancies in recent history. And asking rents in Manhattan, Brooklyn, and Queens, they have imploded. I mean, listen, we know this. We talk about this. I know people who too have moved around and they're like, yeah, I got a great deal. I got all these extras thrown in. So it's really pretty remarkable. I guess the question is, though, how long does it last?
Yeah, and that's a very valid question, Carol. Just let me throw out one more potential deal breaker, and that is, yes, the landlords are dropping the rent, but what is the broker charging to rent the place? That could be a potential deal breaker there.
Yeah, exactly. And everybody says, too, the bottom isn't finished falling out. Summer is the season when most households move since the weather is warmer and children are out of school. So, you have leases start and end in July. So we're going to be watching these numbers very, very closely. All right, Charlie Pellet, thank you so much, as always.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, just getting word from General Motors that it has hired Delta Airlines Chief Financial Officer Paul Jacobson to the same job at the automaker, filling a key post vacated by its once up-and-coming star Divya Suryadevara in August. He starts at the Detroit-based manufacturer December 1st. Down day on Wall Street, stocks declined, capping their biggest weekly rout since March after earnings from the largest tech companies disappointed investors concerned that a slowing economy will damp profit. Today we saw the likes of Apple down 5.6%, Amazon down 5.5%, Facebook tumbled 6.3%, Twitter plunged 21.1%. S&P down for a second week, falling 40 points today, down 1.2%. The Dow down 157 points, down 0.6%. Nasdaq down 274, a drop of 2.5%. 10-year down 14.30, 10-year yield 0.87%. Gold up 0.6%, 18.78 the ounce. West Texas Intermediate crude down 1.6%, 35.60 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, really appreciate it. Charlie Pellet there with an update on your top business story. So you might recall yesterday we talked about this in our discussion with Bill Boulding, the dean at the Fuqua School of Business at Duke University. And this was about President Trump's war on student visas and how it raises election stakes for colleges. We want to get more on this story with the reporter who wrote it, and you know her well. Bloomberg News higher education finance reporter Janet Lauren is back with us. She's on the phone in New York City. Janet, it is good to have you here with us. So tell us about what's going on.
Well, the upcoming election has big stakes for international students and, as a result, colleges. Many colleges, in some ways, depend on international students to help fill out their budgets because many of them pay the full price. They don't qualify for federal financial aid, so they're usually coming and paying for the brunt of their costs themselves. So over time, the number of students, the percentage of growth of the international students has really been waning. In the 18-19 school year, which is the last year we have data for, it was pretty much flat. And if you look at the growth, really since 1972, there were only 3 years that were worse than last year. So we're setting the stage for international students don't feel as welcome to come in the U.S. because of a lot of the policies that the Trump administration has been putting forth over the years. And really, since the summer, colleges have almost been on the offensive, trying to push back some of these policies. One we've spoken about on visas, that students would literally have been deported if their colleges had switched to virtual, which, as you know, several of them did, including University of North Carolina and Michigan State. So they actually did pivot, and had this proposal gone through, that would have been a big mess. But a bunch of schools led by Harvard and MIT sued the government and said, you have to block this policy, and that ultimately was rescinded. But then a month ago, we had another proposal about length of stay, that the government was trying to restrict how long students are staying in the country to as many as 4 years. They could apply again, but these procedures are completely unknown how they would work. So colleges really feel like they've been on the offensive for quite a while, and they're nervous that this will continue.
Right. Okay. So and I guess the nervousness comes from an assumption or expectation if indeed we get a second term by President Trump in the White House. But so does a Biden, if let's say it doesn't play that way and we get a Biden victory, does that automatically flip things around or not so fast?
Well, not so fast. We have an expert in our story saying, some of this stuff will take a long time to repair because in these interim years, students from overseas, especially China, have been looking at alternatives to other English-speaking countries. If you look at Canada, has a national immigration policy, and they're certainly more welcoming, and they're really trying to bring students in, as well as the UK and Australia. And this is a problem for universities because it's a huge economic impact. We're talking about roughly $40 billion to colleges in their hometowns.
I have to say that number just jumped out at me. Janet, we've been talking so much, right, about amid the pandemic and the impact of the economy shutting down, and it's just a and just how important colleges and universities are, whether it's their sports teams and so on, in terms of helping local communities, but how much economic firepower that they really kick into the U.S. But it's a lot, and international students alone contribute so much.
Yes, and it's not just they're paying tuition and fees and room and board to schools. It's they're going to local restaurants, they're buying clothing, they're going to the movies. In some cases they may buy a car, and it's a lot of money. And you're talking about graduate students. You had mentioned Duke yesterday. Graduate students, especially MBA programs, really are helping to offset budgets at colleges from international students, and they too have seen declines. And we know 14% of international undergrads, there was a decline of 14% from last year to this year. So schools are really feeling it at the time when things are very pinched. They're having to spend more money for COVID testing. They're having to spend more money for plexiglass. They're having to spend more money for a lot of things. And at the same time, fewer students are coming. So they're collecting less in tuition revenue as well as room and board.
So what does it mean, though, then, for all of those? I'm just thinking about, we've often talked on air for those of us who have college-age kids. I mean, how does it impact, then, U.S. students?
Good question. So this year is, of course, a very unusual year. You have 14% decline in freshmen of international students. So what's going to happen next year? It's not really clear, but it could be a help for U.S. students if fewer international students are coming, especially to those really competitive schools, that it may help U.S. students that there may be more spots available for them next year. But it's unclear. And, if you look at how the system of higher education works, especially if you're going to a state school and, full-pay international students often help subsidize local residents, or if you're going to a private school, full-pay international students are, they're paying the full price. They're able to help some of the lower income students who are not paying the full price.
It gets tricky, that's for sure. Well, great reporting as always, Janet. Really appreciate you coming on and talking about this. Janet Lauren, she's our higher education finance reporter at Bloomberg News on the phone from New York City. And check her out on Twitter at Janet Lauren. For those of you listening in New York and San Francisco and watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is coming up next. Coming up next, though, on Bloomberg Radio, we're going to talk a little bit about really AI and how it's connecting consumers to engage with companies. So we're going to check in with Rob Locascio. He's back with us in just a moment, right here on Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Masser. And coming up, we're going to check in once again with Rob Locascio over at Live Person, talking about earnings and consumers and just the role of digital. We've seen it really take a bigger role amid the pandemic. We'll get into that in just a moment. Back to right now to your top business stories, and back to you, Charlie.
Hi, thank you very much. Happy Friday to Carol Masser. For the week, the S&P was down 5.6%. The Dow this week down 6.5%. NASDAQ down 5.5%. Second weekly loss for the U.S. stock market in a row. Stocks declined, capping their biggest weekly rout since March. Earnings from the biggest tech companies disappointed investors, concerned that a slowing economy will damp profit among some of those tech names today. Apple dropped 5.6%. Amazon after earnings down 5.5%. Facebook down 6.3%. Twitter was down 21.1%. Mohamed El-Arian is the chief economic advisor at Allianz, parent company of PIMCO. He's also a Bloomberg opinion columnist, and on Bloomberg television this morning, he said the election is also weighing on sentiment.
I think what the market wants to know more than anything else is, will we have a functioning transition? If we have a transition, and if we don't have a functioning transition, will the government or the presidency that prevails in January have a divided Congress or not?
Starbucks capped its fiscal year with better-than-expected quarterly results as the key American and Chinese markets inched closer to growth but didn't quite get there. Starbucks shares down today by 1.5%. Marriott International has been fined almost $24 million by the UK privacy regulator for failing to protect the data of millions of customers during a hacking attack on reservation databases. Marriott International shares today down 0.5%. Marriott reports earnings next week along with Hilton. Hilton shares did advance today, up by 1.5%. Stocks lower. S&P down 40, down 1.2%. The Dow down 157, down 0.6. NASDAQ down 274, down 2.5%. 10-year down 14.30. 10-year yield 0.87%. Gold up 0.6%, 18.78 the ounce. Crude down 1.4%, 35.68 a barrel. I'm Charlie Pellet. That's the Bloomberg Business Flash.
All right, Charlie, thank you so much. Back with us is Rob Locascio. He's founder, chairman, and CEO of the publicly held application software company. We're talking about Live Person, and their stock has been on quite a run. It's an AI-powered conversational platform for consumers to really engage with companies, and we know that's certainly when you think about the digital world, been really key amid the pandemic. Rob joining us on the phone from Sicily, Italy. Rob, nice to check in with you once again. First of all, you're in Italy. How is it going? Because we've been watching those virus numbers, especially over in Europe, Italy in particular. I was on the phone with someone earlier talking about what's going on in Milan. How is it going?
I mean, in Sicily, it's not bad because they locked the island down at the beginning. Yeah. So been for about a little over 8 weeks, and it's been pretty good. Now they've stopped. You can't go to dinners or any of that, so they're locking it back down. So they're expecting more increases. But it's a little bit better than the United States, getting it under control.
So I am curious, what your world has been like. We talked about it last time. Tell us as we continue to deal with this pandemic. And, it obviously looks like we are, in a second wave. What are you seeing in terms of your clients, your customers? What are you seeing in terms of engagement?
Yeah, obviously the biggest opportunity and impact at the same time has been to retail, and the retailers we're working with now on two things. One is obviously some people are moving more heavy to digital where they weren't in the past. They were just relying on stores. So we're powering, like we just signed one of the world's largest jewelers. We got thousands of stores. Some are open, some are not, but they want to sell jewelry, and people want to ask questions, and they want to have these conversations with experts. So we've powered AI experts to drive conversations with consumers to sell them diamond rings and things like that. And then now also in the store is that people are coming in the stores where they're open, but they want to be socially distanced. And they want to look at things, but they don't want a salesperson in their face. So we now created that next to the products, there's a little QR code. You take your phone out, you hover it over the QR code, and then you start messaging an automation or a virtual agent, someone who's not there, who's someplace else, who will answer questions about jewelry and things like that, and then stay connected to you after you buy to make sure everything's okay. So it's opened up a different way to sell. For the holiday season, we're seeing a lot of demand right now because I think most people are going to be buying online, but the retailers want to create the special connection that they would in a store with a human. They want to create those moments, those conversations, but do it digitally, and that's what we're powering over messaging with AI.
You know, this certainly concurs with, we caught up with Brian Duffy, CEO of Watches of Switzerland Group, a few weeks ago, and he said, you know, they already had a pretty significant digital presence, but, you know, went from beyond just checking out the website to actually doing Zoom or, you know, some other virtual call on a platform with a customer, you know, where they could have some face-to-face interaction.
Yeah, I mean, we actually launched a platform called Hey Experts. It just launched about 2 months ago, and it's for experts like Pilates instructors and teachers and all that to get online and use video like Zoom and stuff like this, but it enables them to sort of manage their customers. So it handles scheduling and payments and all of that. And we're having great successes with that right now because all of that got moved. I remember I just saw like a Pilates instructor in Israel shut her studio down. She joined the platform. She brought 7 other instructors with her, and now they're giving 100% of their lessons online, and we're powering that. So we talk about conversational commerce. It's about, you know, these live interactions. There's these scenarios where it's not good enough to just show up at a website and, you know, put something in a shopping cart and never ask a question. Most high-valued products and services, people want to ask questions, and we power those, and we power it with AI. Part of that is automating those conversations.
Yeah, it's, you know, and I always feel like we've had chats with certain things, but you're right, like, especially when it comes to high end and the ability to really, you know, potentially get somebody a face, right? You're more inclined to maybe make that purchase as a result.
Yeah, and I think what happened was, and we've seen this, is that a lot of people had websites. Even small businesses have websites, but when their stores were shut down, they had no way to connect with those consumers who normally come to the stores. Like, they didn't have a mailing list. They didn't have their phone numbers, you know? Like, they may have some emails. So what we found is that they started to think about, I should have been messaging with them. I should have had that, the same way I'm messaging my friends and family, I should be doing that with my customers, and I need a system to do it. And I would have stayed connected. Like in New York, you know, that's where I live. We'd see these pictures. Dial this phone number. I'm not in the store, but you can come here, and I'll come over and run and sell you something.
Right. Hey, Rob, hang on a second. We're going to come back to Rob Locascio in just a moment. In the meantime, let's get a check on world and national news. Let's go over to Denise Pellegrini. Hey, Denise.
Hey, Carol, thank you. Well, we have more sobering COVID-19 news. France is reporting 545 deaths in the latest 24-hour period. Now, that's the most since May. And cases are also continuing to rise in the U.S. Strong voter turnout in New Jersey for the presidential and local elections. Governor Murphy saying the number of folks who have mailed in ballots now equals about 80% of the total vote in the last presidential election in 2016.
I don't care who you vote for, but I do care that you vote. So keep it up, folks. That's extraordinary.
More than 3.1 million New Jersey residents have already voted. Joe Biden is warning Iowans to think about what another 4 years of President Trump would mean for the farming industry. That's after attempts to make trade deals with China fell through, and Biden is asking voters to help him restore America to its superpower status.
I believe when you use your power, the power of a vote, we're going to change the course of the country and, quite frankly, the world.
And President Trump also swinging through the Midwest, rallying supporters in Michigan, Wisconsin, Minnesota. Now, recent polling shows the president trailing Joe Biden in all 3 of those swing states. In a Detroit suburb, the president mocked Biden's running mate, Senator Kamala Harris.
Kamala. You have to pronounce it exactly right, otherwise she gets very upset, even though she can't pronounce it right. You saw that the other day.
And you might be noticing a lot of small plane traffic around major metros, including the tri-state area lately. That's as wealthy financial executives commute by air from their homes in the Hamptons and Hudson Valley. Global News 24 hours a day. I'm Denise Pellegrini, and this is Bloomberg.
All right, Denise, thank you so much. You are listening to Bloomberg Business Week on Bloomberg Radio. Carol Master along with Charlie Pellet. So, Charlie, I feel like 2020 is going to be the year of many things. Of course, COVID-19, the election, but it's also going to be the year of Robinhood that kind of took off like a rocket, but we're starting to see, kind of some cracks in, I feel like, the way it all works.
I was going to say, it certainly raises the question, will it be the year of Robinhood after reading this story on the Bloomberg Professional Service? And basically, it comes down to all of these credentials, Robinhood credentials, ostensibly, according to our story, being available for sale on the so-called dark web. Access to more than 10,000 email login credentials allegedly tied to Robinhood accounts were available for sale this week, according to our story.
Yeah, and what's wild is, listen, we've been talking about Robinhood versus some of the established online brokerages, and apparently the number of Robinhood-related emails, outnumber those for other brokerages by about 5 to 1. This is according to the CEO over at Q6 Cyber. It's an e-crime intelligence firm, and it analyzed the prevalence of these advertisements on the dark web. I mean, the dark web is this crazy place, but there are people who kind of can access it, analyze what's out there, and get an idea of what cyber criminals might be interested in. But it speaks to, right, Charlie, a deeper thing, and that is the concern about your safety. If you have an account on Robinhood, you want to make sure your investments are safe and secure.
I feel like I've seen this movie before because didn't we go through this with Bitcoin?
Yeah, but listen, here we have Bitcoin, right, surging to record levels again. So, we do see some concerns about this, and whether it's, customers being locked out. I know last time around we had some concerns with Robinhood. I know people reached out for like a customer service line, and they just couldn't reach anybody.
Yeah, and it is an amazing story. Hopefully it's up on the website already. Sophie Alexander, Kartikeya Malhotra, fascinating story, but hackers on the dark web say they've got the keys to 10,000 Robinhood accounts.
And I got to say, the firm says that there are no signs its systems were breached, so just want to put that caveat out there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A move lower for the U.S. stock market, second declining week in a row. Let's begin with the weekly numbers because on the week, the S&P 500 index slumped 5.6%. Stocks dropped today, capping their biggest weekly rout since March. Earnings from the largest technology companies disappointed investors, concerned that a slowing economy will damp profit. S&P down 40, a drop of 1.2%. NASDAQ dropped 274 points, down 2.5%. Among some of the NASDAQ names, Twitter lower today by 21.1%. The Dow down 157 points, down 0.6%. 10-year down 14.30 seconds, 10-year yield 0.87%. Crude oil, West Texas Intermediate up 0.6%. That's a gold at 18.78 the ounce, up 0.6%. West Texas Intermediate crude down 1.2%, 35.75 a barrel. Recapping equities lower with the S&P down 40, down 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. I want to get back to Rob Locascio, founder, chairman, and CEO of LivePerson. He's on the phone in Sicily, Italy. And Rob, our apologies. We cut you off a little bit as you were finishing up. You were talking a little bit about what's going on in New York. I didn't know if you wanted to finish your thought.
No, I'm fine.
Okay. I know it was a few minutes ago.
I was listening. I heard one of our customers, Lowe's. We're doing a lot of great things with them.
Yeah.
They're doing awesome right now, and we're powering a lot of that commerce through conversational commerce. They're one of our largest customers. So their success, you can see it. They've had just a tremendous amount of obviously shift to digital, and we're doing a lot of selling on that website with them, which is driving our growth rates. We had an amazing quarter. A lot of this, is driven by what's happened with COVID and the shift from retail, and so they just came on my mind because I heard the commercial about them.
That's okay. No, you know what's interesting that you say that, Lowe's, because I was actually looking at like buying some paint online, and just there's a bunch of different companies, and it's amazing. And I'm assuming when you talk AI too, it's some of those chats that just, they're like answer these questions, and you kind of started going back and forth, and you feel like, okay, I feel like I'm in the store almost, talking with someone to figure out what I want and what I need. I mean, we are increasingly moving towards that as a consumer.
Yeah, and I mean, there's actually a really good story there. We have one automation called Grill Master, and this AI has a personality, and he basically sells you grills and answers questions about grills, and he'll say things like, "Do you want to cook steaks on it? Do you want to do things more like fish? Do you like to?" And it's really interesting, and that was created by agents who were taking chats. So these were contact center agents who were taking chats, and they've now elevated, and they've become conversational designers for AI. They like doubled their salary. So there's a whole group of people out there that are handling voice calls and doing this very old job, and they can get into the AI game. And once again, at Lowe's, we have, as you saw, we have many automations running on their website.
Right.
And they're created by humans. They're created by people who normally were selling on the website by chat.
Right. It feels pretty normal or almost natural, if you will. Hey, I got to ask you, just to take a step away for a second, earnings. I mean, you guys are up 45% this year. What has business been like? How busy have you guys been amid the pandemic?
Yeah, I mean, we grew 26% this quarter. We grew 29% last quarter. We hit the rule of 40. I mean, it's been a pretty great year for us. And the pandemic, what it did first was shut down physical contact centers, and the agents were sent home. And, it's just very hard to route a voice call to someone's home. And so what happened was our customers, these are the biggest brands in the world, telcos and retailers, they said, look, we want to automate that. We should have done it a long time ago, and now we have to do it. And that's what's been driving the tremendous growth in our business. Then we add to that the retail things we talked about. Insurance is coming on big. And even, we signed last year a bunch of airlines like Delta Airlines and hotels. We were very focused on hospitality. And they've doubled down now. They're like, even though their business is majorly impacted and they're in a lull, they're now retooling their businesses using our technology, because when they come through this, they don't want to do it the same way they did it. They wanted that when you're on your way to an airport and your flight's delayed, you get a message. But not only do you get a message, you can then communicate with information to rebook. When you arrive in the airport, they can give you information. When you're on the plane, they can stay connected with you. Maybe you want to book a vacation a month later. They want to be connected to you. So they envision this connected experience that doesn't exist today, and they're doubling down on using technology like ours to do that.
You know, we think about some of the trends that I think there are some trends that we're using now, but that we might not continue to do so much. And maybe that's something like, you know, a video conference or virtual platform, especially as we all get back to the office. But I do wonder that this sounds like when it comes to commerce, I do feel like retail is being impacted in a big way. And there's a lot of things, especially that will stay with us longer. And that includes what you're saying about conversational commerce. It feels that way.
Yeah, and we, you know, there's the shift from voice to messaging to AI. That's the stuff we talked about. But the bigger shift is the shift from e-commerce to conversational commerce. And if you can envision a world where you're communicating with the machine, not going to a searching on Google, hitting a landing page of a website, scrambling around, looking around. Maybe you have to then pick up the phone and call a contact center because of something that happened on the website, or you need more information. Imagine just saying, you know, I'm looking for to buy a car with the machine. Okay, great. What do you want? A family for your family? Is it for your single? I want this type of car. Great. And it just helps you through without going from search to landing page to phone call to email, outbound email marketing. You keep it in a single conversation all the way through. And that's going to happen. Like what we're trying to build, have you ever seen the movie Her?
Yeah.
We're trying to build that type of AI for all of our customers, like that loving, caring AI, and we're going to get there. And it will replace e-commerce. We will not be going to websites. Like my kids won't be going to a website and scrounging around and putting something in a shopping cart. They'll just talk to a machine and get things done.
It's really kind of wild, right? It's really the next step, if you will. Hey, listen, while we have you, I did want to ask you about, you run an organization called Feeding New York City, and you deliver thousands of Thanksgiving meals to families in need each year. I know we talked about your work here in that area last time you were on. What are you guys seeing in terms of demand among the families in New York?
You know, we have major problems. I mean, we've been delivering turkeys since after 9/11, and we're going to feed 5,000 families this year. So we're touching in the metro area, you know, all the families, about 8,000, a little over 8,000 families in the shelters of New York City. There are so many people who are hurting, you know, who have lost their jobs, and it's the demand for even what we're doing with turkeys is beyond what I've ever seen in the 20 years of us doing this. So, you know, we need help. You know, we're raising more money. We're gonna try to feed more families, but we can see it. We're on the ground with it, and this is about children. You know, this is about moms, mothers who are managing, and you know, their lives. They've lost a job. They've got their children. They're in a shelter. You know, what you don't realize is most people, they don't want to be in a shelter. They just they didn't have that support system, and they ended up there. And it's a way for them to move on and move forward. Sometimes they're in abusive relationships, and so we have to help them. And a lot of people are doing very well in the world. And I don't think, you know, you always realize there are people in your neighborhoods. Like the one thing I realized with Feeding NYC is like there are people in every neighborhood of Manhattan, even in wealthy neighborhoods, that they're in shelters. There are shelters on 23rd Street and 10th Avenue in the middle of Chelsea.
You're absolutely right, and I hope people go and check out Feeding NYC. Hey, Rob, thank you so much. Stay safe. Always good to check in with you, the CEO at LivePerson. This is Bloomberg.